Well, they say bada hai to behtar hai, and a company based 14,500 kilometers away in Santa Clara is justifying that tagline. And how? That is Nvidia for you. The AI behemoth and Wall Street darling became the first company to cross $4 trillion in market cap on Wednesday. It has taken just over 13 months to add the latest $1 trillion to its value. However, take a look at this rapid rise that Nvidia has seen. Its first $1 trillion came in May of 2023. In 9 months, it was at $2 trillion. 4 months later, in June of 2024, it was at $3 trillion. And had it not been for Donald Trump and his tariff tantrums, who knows, we may have been doing this just a few months earlier itself. Now imagine Nvidia being a country. At $4 trillion, its GDP would be higher than most countries of the world. In fact, it will be the 5th largest economy of the world, behind the US and China, just a shade below Germany and Japan, and just a shade higher than the Indian economy. Now, when I spoke about the Trump tariffs in April, they spared no one. Nvidia shares also fell to their 52-week low, but the bigger part is the recovery. The stock has nearly doubled from those April 7 lows that they had made, and that's just a 3-month window. Now, at $4 trillion, Nvidia is 73% of the entire Indian stock market capitalization, which stands at just over $5.5 trillion. Nvidia is now the size of 30 HDFC banks, 37 TCSs, and 22 Reliance Industries individually. Now, wealth creation is the motto to be in the stock market, and Nvidia has done exactly that. Since 2013, Nvidia has had only 2 negative annual years in terms of share price returns. Its 15-year average return is a cool 70%. Now, take a look at this. Since 2020, Nvidia has had 4 years where the stock has either doubled or even tripled in value during a calendar year. This year, too, the stock is up 22% after the recovery from the plunge that it took earlier in 2025. But there are challenges that lie ahead. Export curbs still remain to the Chinese markets. Now, founder and CEO Jensen Huang said that these issues have completely cut Nvidia off from a $50 billion Chinese market. They took a hit in the first quarter, and another $8 billion hit is likely in the second quarter as well. The other challenge is the slowing revenue growth. But the definition of slow here is just a case of raising the bar too high. Now, 5 out of the last 8 quarters has seen Nvidia report revenue growth in excess of 100%, some even 200%. And at this size, anybody will happily take a 69 to 70% revenue growth. But such are Nvidia's standards that the street is worried that those 100% growth days will never return again. Lastly, sticking to the saluting the rising sun terminology, Wall Street continues to remain bullish on Nvidia despite the surge that it has seen. 68 out of the 78 analysts who cover the stock continue to maintain a buy recommendation, and the odd one out, a solitary sell. Now, that's Nvidia for you. The journey from $1 trillion to $4 trillion has happened in a jiffy, and the onus now lies with Jensen Huang and company to embark on the next trillion, one chip at a time.
Thank you for watching CNBC TV 18, and do follow us on all our social media platforms for news, updates, and more.